This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Rally fades. The optimism of yesterday did not carry into today. Will a global meeting of central bankers help the week lift the mood?
And teaming up, the world's largest retailer and the world's largest search engine are getting together to mount a challenge to Amazon and change the way we shop.
Lotto mania. Haven't bought a Powerball ticket yet? Well, there are 700 million reasons why you might want to. Those stories and more tonight on Nightly Business Report for Wednesday, August 23rd.
Good evening, everyone, and welcome. Stocks fizzle after yesterday's sizzle. Today's selling, a day after the largest one-day gain since April, may have been due in part to comments made last night by the president. He said he's ready to shut down the government unless Congress passes funding for a border wall with Mexico. One analyst called the comments unsettling, noting that they're not good for the investment environment. The deadline to pass a spending measure is at the end of next month, while at the same time, lawmakers face a deadline to raise the nation's debt limit. That's a much more serious issue for the markets. Today, Fitch Ratings Agency said the country's AAA rating is at risk if the debt ceiling is not raised, and that took some wind out of the market. The Dow Jones Industrials down 87 to 21,812. NASDAQ off 19. S&P 500 lost 8. With the shadow of Washington hanging over the market, attention today also turned to Jackson Hole, Wyoming, where central bankers are getting ready to meet later this week. And the gathering comes at a critical time for investors. Bob Pisani explains.
It was a quiet day, but the trading action could pick up later this week when the Federal Reserve meets with global central bankers for their annual Jackson Hole Symposium. The focus will be on Fed Chair Janet Yellen and ECB President Mario Draghi on Friday. And while we've already been told to expect no surprises from Draghi, the euro could rally if he discusses a timetable for unwinding the ECB's bond buying program. We'll see about that. In fact, we might be in for a battle between the euro and the dollar as the two banks look to rein in stimulus. This has been a big issue for a while now on where the central banks are going. This meeting also marks the end of an era of both easy money and possibly Janet Yellen's tenure as the Fed chair. The Fed's facing a dilemma right now because even though the unemployment rate is at a 16-year low, inflation is barely budging. If Yellen expresses any bit of confidence that inflation will pick up in the next few months, despite depressed energy and retail prices, markets could be in for a little bit of a surprise. Now, New York Fed President Bill Dudley, who's a close ally of Yellen's, said just last week that he still favors a third rate hike this year and expects to see firmer wage gains push inflation up towards the Fed's 2% objective. The other big question mark is the possibility of a U.S. government shutdown. President Donald Trump's comments about building a wall, even if it means shutting the government down, clearly has investors a little bit on edge today. But could that worry the Fed enough to put another rate hike on hold? Not sure about that, but it's doubtful. Right now, the markets are putting the odds of a December rate hike at roughly 40%. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So, with central bankers meeting later this week, should you now shift your attention away from Washington to the Fed and the economy? Michael Yoshikami, founder and CEO of Destination Wealth Management, joins us to talk about that. Good to see you as always, Michael. Welcome back.
Thank you, Sue. Good to see you.
I think one of the problems with trying to shift away from Washington is some of the things that the president brought up are so very important to Wall Street, like the debt limit, like the government shutdown and the like. How do you make that pivot from Washington to the Fed?
So here's the question. If you think about it from an investment standpoint, if there's a government shutdown, let's just say, for example, there is a government shutdown, how long do we really think that's going to last? Do we think it's going to last a day, an hour, a month? I think it's going to be very short term, if at all. And I think that's what investors right now are starting to focus on, which is, yes, a shutdown might occur for a day or 3 hours, but in the end, interest rates are low. The 10-year Treasury is below 2.2% at this point. We have reasonable earnings numbers, so I think investors really are focusing more on economic fundamentals.
Let's turn to the debates that will take place this weekend or week later this week at Jackson Hole. The Wall Street Journal had a story this morning. This is one of the rare times in recent history that virtually all of the major economies around the world are doing well at the same time. Have the central bankers mostly got it right? Should they just leave things the way they're doing them now?
Well, from our view, Tyler, yes, they should. I still think the economy, even though the U.S. economy is doing better, I don't think things are great. And as you correctly point out, many economies around the world are doing fairly well. But I think it's really very fragile, particularly given the geopolitical situations that we face from a terrorism standpoint, issues related to dislocation in technology in terms of how it's changing industries. So I think at this point, it's probably wise they stay on a course where they're less aggressive in terms of raising rates as to what most people thought they would do 6 or 12 months ago.
So what does that mean for stock markets, not only around the world, but for our stock market in particular? Because some of those external events tend to whipsaw stocks, but overall, the market's been doing extremely well.
Well, I just got off the phone with someone just an hour ago asking me that exact same question, which is what do we do if, for example, the markets have a swoon because of some political news, maybe a government shutdown? In our view, if you're buying assets that have reasonable valuations and you see a swoon in the market, this is an opportunity. We're still constructive about stocks. We don't think that they're cheap by any stretch, but relative to, say, fixed income assets, I think there are opportunities out there. So I would look at dips in the market, and people say this, but it's really very true. Dips in the market is a buying opportunity.
On that note, Michael, thank you very much. Michael Yoshikami with Destination Wealth Management.
Well, the housing market stumbled just a bit today. New home sales unexpectedly fell in July, 7-month low, even as prices surged. And that is raising concerns that the housing recovery could be slowing. Diana Olick takes a look.
Newly built homes are more expensive than ever before. They're also more expensive when compared to similar existing homes than they've ever been before. And that is why sales are suffering, dropping about 9% in July compared to June and compared to July of last year, according to the U.S. Census. They are simply out of reach for too many potential buyers. It is even more apparent in a simple map. Sales fell most in the Northeast and the West, where homes are most expensive.
People are actually going to where homes are more affordable, and you're seeing slightly lower activity in more costly markets.
The median price of a newly built home jumped over 6% to $313,700. It is the highest July price on record. Affordability is clearly rearing its head here. This as the supply of newly built homes rose. You shouldn't be seeing both price and supply rise together. Existing home supply is extremely weak, and builders should benefit from that. But demand is mostly on the lower end, where builders say they can't afford to put up cheaper homes due to higher construction costs. Buyers have always paid a premium for new construction over similar existing homes, historically about 10 to 20% more. But in the last 6 years, that premium has more than doubled.
Maybe builders have misjudged the market and priced at a little bit higher range. I think people are holding back a little bit.
But if builders don't bring their prices down soon, they may just see their houses sit unsold. For Nightly Business Report, I'm Diana Olick in Washington.
The home improvement boom did not help Lowe's in its most recent quarter. That retailer reported lower than expected earnings and warned of slower growth in profit margins. This as it spends more on marketing and staffing. Lowe's plans to increase employee hours during peak times as competition with rival Home Depot intensifies. But investors focused on the disappointing outlook, and that sent shares lower on the day.
Walmart and Google joining forces to take on Amazon. Starting next month, shoppers will be able to buy products using Google's voice-activated assistant, the Echo or Alexa. The decision is aimed squarely at the future of retailing and targets the growing users of voice-activated shopping devices. Courtney Reagan has more.
Watch out, Amazon. Alexa is getting more competition as two big companies team up. Starting next month, consumers that have Google's Home Assistant will be able to place Walmart orders for hundreds of thousands of items by using only their voice. While Google already partners with about 40 retailers like Target, Costco, and Whole Foods, Walmart is the first to offer linking your purchase account history with Google's Home Assistant, allowing shoppers to simply order detergent, prompting the assistant to offer you Tide plus Febreze liquid laundry detergent 92 ounces based on what you purchased before instead of guessing, which is why Walmart's e-commerce CEO Mark Lowry says easy reordering is one of the best features. Although Amazon's Alexa assistant already has the intelligence of your account history.
3-4 years ago, it was clear that Amazon was the undisputed leader in innovation retail. And I think now you have a Walmart that is incredibly aggressive with innovating. They're clearly following a lot of Amazon's moves, and in some areas become more innovative than Amazon. So it's gone from kind of a one person leading the pack to very much a two-horse race.
eMarketer estimates that only about 11% of Americans use a voice-activated assistant one time or more a month right now. But of those that do, more than 70% are talking to Amazon's Alexa. Less than a quarter are talking to Google.
Over the foreseeable future, you'll see more voice ordering, and I think that will be maybe the new mobile as you go down the next 5 to 10 years.
I asked Walmart's Mark Lowry how valuable voice-activated ordering is. He says it's early days now, but thinks one day, as the experience improves and as artificial intelligence continues to get better, I do see this as being a primary way for consumers to shop under certain conditions, under certain use cases. While Walmart will get the benefit of being the first to link order history with Google, Google Express General Manager Brian Elliott tells me there's nothing preventing other retailers from doing the same. Even, he says, if Amazon wanted to be an order option on Google Home. For Nightly Business Report, I'm Courtney Reagan.
Amazon's proposed takeover of Whole Foods took another step forward. Shareholders of the organic grocer approved the nearly $14 billion deal. Regulators also cleared the merger, saying it does not need further antitrust scrutiny. Both companies hope to close the deal before the end of the year. The takeover is the biggest U.S. retail merger so far this year, and it would be the third largest since 1995.
Well, Amazon is one of the reasons why the world's biggest ad agency is cutting its revenue growth forecast. WPP's CEO said some of its clients, mainly packaged good companies, are coming under increased pressure from technological disruptions like Amazon, as well as from activist investors. Now, many of those packaged good companies have big marketing budgets, which they're starting to cut.
I think there are three forces at work here. The first is digital disruption, which is not a threat to the industry. It's an opportunity more than a threat. The second thing is activist investors who've taken positions, particularly in packaged goods companies, which have put them under short-term pressure. And then the third force here is the zero-based budgeters, who are, again, using low cost of capital money, cheap money, which we've had since Lehman, have started to acquire companies and take positions in companies, again, putting them under short-term pressure.
Shares of WPP fell more than 11% in trading today.
Still ahead, big rigs are going high-tech.
You could call it a beer run, literally. We're going to be getting inside this truck as it transports 2,000 cases of Budweiser. We are looking at technology and how it is transforming this $700 billion trucking industry. That is coming up on Nightly Business Report.
A new report finds that collision avoidance systems are drastically cutting the number of accidents and crashes with injuries. According to the Insurance Institute for Highway Safety, lane departure warnings are lowering rates of single vehicle side swipes and head-on crashes by roughly 10%. Also cut the rates of injury crashes by about 20%. The study analyzed more than 5,000 accidents in 2015.
Technology is also helping to streamline the trucking industry. An app is helping to match empty trucks with freight that needs to be hauled, so goods can be moved from place to place more efficiently. Morgan Brennan takes a look at the trucking industry's Uberization from Newark, New Jersey.
William Lugo has been hauling freight with his own semi for 24 years. 6 months ago, he started using an app on his smartphone to find shipments in need of a truck.
Before, everything was more manually, far as paperwork, a lot of downtime. Now technology makes it a lot easier to between loading, unloading.
Call it the Uberization of trucking, a technological shift 2 decades in the making that's shaking up the $700 billion trucking industry. User-friendly apps running on the cloud, powered by algorithms that connect a shipper with available truckers at a market-competitive rate.
Take this big rig we're riding in right now. The load it's transporting was brokered using Convoy, a Seattle-based startup that's raised capital from the likes of Jeff Bezos, Bill Gates, and Mark Benioff.
The app connected Lugo with Anheuser-Busch, who needed to move 2,000 cases of Budweiser from its Newark brewery to a distribution center in the Bronx. The beer maker says this new technology is making its supply chain more efficient.
Is really use rich contextual data so that we can learn more about our business. For example, we can understand where we're delaying drivers at pickup, or we can see the truck as it evolves and delivers along a map along its route through the delivery.
The move toward automation represents a big change in how truckloads are brokered, a business that has always relied on people, relationships, the phone, even fax machines to match freight to trucks. And Convoy isn't alone. Uber launched a service earlier this year. Amazon is exploring the space, and other startups include LoadSmart and Transfix, which Anheuser also uses. But traditional brokers like C.H. Robinson, J.B. Hunt, and Echo Logistics have been investing in new technology as well. C.H. Robinson, for example, has launched 2 apps since 2011. Analysts say competition is high and the barrier to entry even higher.
If you don't have the customers right now, and you don't have the carriers, you're going to need to either pay the truckers more or charge the customer less, squeezing your own margin, to try to build density in the network.
But whether it's a newcomer or an industry stalwart, the innovation means more transparency for shippers, and for drivers like William, more money.
I'm seeing a lot more production with the company and a lot more money, and it's going great for the business, for my business.
For Nightly Business Report, I'm Morgan Brennan in Newark, New Jersey.
Well, the trucking industry may be getting Uberized, but mutual funds are cutting their valuation for the ride-hailing company Uber. The decision reflects concerns that Uber's leadership issues will hurt business. According to filings of portfolio holdings, Vanguard, Hartford, and T. Rowe Price have all cut their Uber share price estimates by as much as 15%. Uber is currently looking for a new CEO. That's being delayed by board infighting. Since Uber is a private company, its formal valuation changes when it raises money from investors. Mutual fund estimates are used as proxies reflecting shifts in investor sentiment.
American Eagle's shares soar, and that's where we begin tonight's market focus. The teen clothing retailer reported higher revenue, helped in large part by strong demand in the company's Aerie brand. The company's same-store sales also beat street estimates. Shares rose nearly 8% to $12.08. Strong e-commerce sales helped clothing chain Express report revenue that topped analysts' expectations. Adjusted profit was slightly better than expected as well. The company also said it's making efforts to drive more traffic to its stores. The shares soared 19% to $6.56. The medical device maker Stryker cut its earnings outlook for the full year after saying it was voluntarily recalling some of its oral care products due to cross-contamination concerns. Stryker said it has discontinued business with the third-party seller that made those products. The company said it expects to resume shipments of the merchandise next month. Shares fell nearly 5% to $138.36.
Fiat Chrysler may be considering spinning off luxury car brands Maserati and Alfa Romeo. Bloomberg says the automaker may shift its focus to mass-market cars, a move that could put the company in a better position for a separate merger opportunity. The two brands combined are worth more than $8 billion. Fiat Chrysler shares up 7% to $14.42. Shares of Lazy Boy continued to fall after the furniture retailer reported disappointing results after the bell yesterday. The company said the sales gains seen in the latest quarter came mostly from acquisitions, not from expansion in its most profitable division. Today, Lazy Boy said it was in talks with Amazon regarding potential distribution opportunities with that e-commerce giant. Lazy Boy reclining just a bit today, plunging 20% to $24.95. And after the bell, home furnishings company Williams-Sonoma reported stronger than expected sales gains and gave an upbeat outlook for the current quarter. Earnings also cleared street targets. Shares initially rose in the extended session, and they also finished the regular day up more than 1% at 43.40.
Samsung found itself in the spotlight. The company rolled out the newest version of its flagship smartphone. Stakes are high following the previous model's exploding battery last year. And as Seema Modi reports from New York, it's Samsung's reputation that's on the line.
This launch is seen as Samsung's redemption moment. Yes, Samsung made the screen bigger, and the new Galaxy Note 8 now has not one, but two rear cameras. But for the company, today is about a lot more than a new smartphone. Last year's global recall of more than 4 million Galaxy Note 7s was a black eye for the company. Pictures of exploding batteries went viral, costing Samsung an estimated $5 billion.
None of us will ever forget what happened last year.
Now, Samsung is hoping to extinguish those fears with one of the largest devices on the market.
I think it's a very sexy phone. I think it's a good rebirth of the Note brand. Samsung is figuring out a way to make larger and larger screen devices without making the device really large. They kind of invented the phablet category because everyone laughed at large phones beforehand. And they stumbled terribly last year.
But one of Samsung's biggest challenges is whether it can stand out from its competitor.
I use an iPhone right now, so I am going to hold out for the iPhone 8 or 7S or 7S Plus, whichever one comes out. I'd like to know what's out there and compare them before I make a decision.
Apple is expected to launch the next iPhone in September, while both tech giants continue to face pressure from their counterparts in China.
Apple and Samsung have been competing at the high end against surging Chinese OEMs for several years now, so I don't think that's anything new.
According to the latest data from Gartner, both Samsung and Apple lost market share in the first quarter of the year to Chinese players Huawei and Vivo, making this launch a test for the future of Samsung's entire Note line. For Nightly Business Report, I'm Seema Modi in New York.
Coming up, hitting the jackpot.
The chances of winning are so astronomically low. So why would anybody come outside in August and stand in line? There are 700 million good reasons. I'm Contessa Brewer. We have more on the mega jackpot for Powerball ahead on Nightly Business Report.
American Express admitted to offering worse credit card terms to customers in Puerto Rico and other U.S. territories than to those in the 50 states. It charged higher interest rates and offered less attractive rebates. As a result, the financial firm agreed to pay a fine of $96 million. The Consumer Financial Protection Bureau said American Express's actions harmed more than 200,000 customers between the years 2005 and 2015.
As of this evening, the Powerball jackpot is the second largest in American history, roughly $700 million, and that is a big number to wrap your head around. And even though the odds of winning are small, someone has to hit the jackpot eventually, right? Contessa Brewer has Lotto Mania in New York City.
At Jeremy's Ale House, the beer comes in styrofoam cups, and the Powerball is self-serve. At one of the oldest dive bars in one of New York's oldest neighborhoods, the food's cheap and the dreams are worth millions. What are you going to do with $700 million?
I have tons of friends, tons of family. I'm going to spread it around, and everyone's going to have a little bit of joy.
But talk about a long shot.
Take a long vacation and take my whole family with me.
When I make this money, I'm going to have a lot of girlfriends. Straight up, a lot. And my money's going to go a long way.
The chances of winning are 1 in 292 million. And they don't improve just because the jackpot is a gargantuan $700 million, the second largest in U.S. history.
If I'm supposed to win, I guess the one time it'll happen, right?
If it seems like we're seeing more of these monster jackpots, Powerball says we are, thanks to a change almost 2 years ago in the way the game's played. There are now 69 white balls in the bin. It used to be 59. And that makes it tougher to get all the numbers. People don't win, the pot gets bigger week after week.
It's much more participation. The higher jackpots drive greater interest and greater sales, and that includes more revenues for the good causes the lottery supports. But also it includes foot traffic for the stores.
The changes have led to a big jump in revenue for Powerball and the 44 states that participate, an additional $10 billion over the last 2 years. And it also puts extra money in the pockets of the retailers who sell tickets. Bobby Patel runs a newsstand in New York's financial district. He makes 10 cents for every Powerball ticket sold. On big jackpot days, it adds up fast.
About 50% more business going up today.
So you stay busy all day long?
Yeah, myself, I'm working a hard person, 7 to 7.
And how much do you think you might make off of a busy day like this selling lottery tickets?
Busy day, I'm making more than maybe 300 or 400 for my commission.
But even lottery skeptics will join in when a massive jackpot's on the line. Do you usually play the lottery?
No, actually I don't.
Do you play too?
Of course, why not? I might become a millionaire. I have a dream come true.
Your shirt says it all, right?
It can happen to me too.
And perhaps for a day, the dream alone is a cure for what ails you.
Awesome.
For Nightly Business Report, Contessa Brewer, New York City.
It's going to be the winning ticket.
Do you have your ticket?
I do not. I should probably go on my way home.
You were going to get it last night.
Yeah, I was going to, and I forgot. So I got to go get it. 700 million reasons. I got to go.
That does it. Go get the ticket. That does it for NBR Tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Good luck, everyone. Have a great evening. We'll see you tomorrow.